everybody, this is Dan Sheridan. Welcome to the end of a wild first week of trading, Friday, January 8th. And right now I'm looking at gold. Gold is at 173.30. Quite a move down today. Down about 3.5% or down 6 points. Interesting, it bounced right off the 200-day moving average, which is approximately 172.18. It dipped under it briefly to a low 171.5 and then popped up from there. So I have a defined risk trade that I'm looking at today, looking for just a slight bounce, but very well defined risk, very good potential yield, speculative play. Here we go. So in GLD, I'm looking for a bullish butterfly. We're right now at 173.10. We're about 40 minutes to go till the end of the day. And gold is down quite a bit today, but it's bounced a little bit. And so here's what I like. It's a directional butterfly. It's a cheap way to take a shot, right? And a good yield. So I'm looking at buying one Jan 22, so a couple weeks out, 171 call. I'm looking at selling two Jan 22s, 176 calls. And a directional butterfly is the combination of a vertical debit spread and a vertical credit spread. So it's, you know, the most expensive way to play a directional bullish play would be buy a call. Then it gets cheaper. You buy a call and you sell a higher strike call against it. That's called a vertical trade. Well, even a cheaper way to do a bullish shot, obviously you don't have the upside of a long call, would be sell a call credit spread against one you buy. So the last part of this would be buying one Jan 22 181 call. So this butterfly would cost, for every one we do, $1.46 debit, or $146. Again, it expires in 14 days. So here's where we're at. This is the expiration graph. Our short strike is 176, and we're currently at 173. We don't need it to go all the way up. We wanted to go in that direction. We're a little bit long deltas on this trade, which is fine. And I'm looking, you know, my game plan is to make 30% or more. And I'd look to get out of this next week. So if you look at this type of a trade, again, you can see what I like about it is you have room here, relatively around 171 to 181. This kind of range, what I'm looking for over the next week. Again, the blue graph is at expiration, the purple graph is today. But if we take the purple graph, the purple graph, that would be today, January, what are we today? January 8th is today. If we go to next Friday, just to let you see, you can see how the graph looks like in a week. So in a week, per one trade, we could be up, we're looking for a profit of about 30%. So in a week, you could be up around $50, $60, which on a $145 investment is about a 30% return. And so that's kind of what I'm looking for on this trade. Again, I'm just showing you an example of one, a directional butterfly in GLD, since it held its support today. And if I'm wrong, again, it's a well-defined cheap shot in this vehicle. Thank you so much. Check us out at SheridanMentoring.com. We have a new class starting next week on broken wing butterflies. And thank you very much.